Very good morning to you guys. The 12th of the 10th, 2022, Wednesday. We've got FOMC later, and we don't have a trade of the day today because the trade of the day does relate to the pound, and the pound has been all over the shop recently, and so we don't really want to be trading the pound in its current state. There's a lot of fluctuations and uncertainty, and the Governor Bailey has given pension fund managers up till Friday to sort out their portfolios, and so he doesn't want a fire sale on pensions. So that's going to cause quite a lot of buying and selling activity in the gilt market on Friday. So on Friday, the pound's going to be going all over the shop, and today it's probably going to be very erratic, and tomorrow as well. So we didn't have a trade of the day because it relates to the pound. We are risk off at the big picture and at the 24-hour change. The live VIX were above 26.5, which is your yearly pivot. So it measures the low point of the year and the high point of the year, and it's the midpoint between those two values. So 26.5 is the level of interest, and we're above that level. However, we need to be looking at the technicals on risk as well, and it looks like it's trying to form a bottom. These guys have got quite squished, but they are adding. That's the trouble. So we could potentially fall sentimentally. Technically, we might be finding some support on a technical basis. So it's all dependent on the sentiment or technical, which one's going to be stronger. Fundamentally, things are quite bearish, but we'll have to wait and see. So technically, we might be okay. Sentimentally, we should be falling. Yeah, so 5 people are long versus the 1 person selling. So normally these guys would be counter trend, and that they're bullish, and they're adding to their bullish bets. So the yields pump, this is the biggest move on the 3-month I've seen since been doing the bulletins. That's a result of the Bailey speech. And I don't think the market's like the word fire sale, because that sent some shockwaves around the market, and it translated across to the US. The Treasury Secretary Yellen had to phone UK, the government in UK, just to get reassurances. So there's a little bit of a panic in the bond market yesterday, and it spilled over from the UK, and that's the result of that. That's a big increase, which is really scary. So if these pump near term, it's risk off near term. This could be a result of the Bailey speech yesterday, so be careful, okay? Now this is risk off, as you know. We shouldn't be seeing like a flattening or inversion like this. We should be seeing it going up, diagonally up, not flat and down. So that's risk off. Hopefully you understand that. This is a flight to safety. So if these do pump, it's saying take your money out of the stock market, invest in bonds, because you'll get a better yield if you invest in government bonds than you would in the stock market. So it just tells us that it's uncertainty in stock markets if these pump, and yeah, we certainly pumped on the near term, but the long dated fell. So that's what the opposite of what we want to see. We want to see near term fall and the long term stay where they are. We don't want the near term to pump. So the big movers are DAX and UK 100 and EJ, and so they've actually gone long quite a lot of instruments. They see lots of red cells, so they've gone long a lot of things, and so by going long, it's a sell for us. Hopefully that's clear. Now the dollar was absolutely mega strong, and Aussie is the laggard, and you see the dollar CAD is the leader, and whether or not this is going to be the bottom, we have to wait and see. It's hard to say because we would be fighting the technicals if we were to buy any of these instruments, because technically, they're quite bearish. So whether or not it's the bottom and we've got a turning point, it remains to be seen. It would be counter trend if we were to buy, sell dollars and buy, euro, or buy pound, or buy Aussie versus the USD. So that's that. So be careful. There's no trade of the day today for the reason I explained at the top of the video. It's because it would have been a pound trade. We're avoiding that right now. And so if you want to get subscribed to see the trade of the day, it's the Bulletin tier, which is quite affordable. If you want to unlock Discord, it's just £15 a month. Get a lot of stuff, a lot of analysis. Signals, trade ideas. I put out a gold trade yesterday and it was really nicely profitable. So you would have got heads up on that gold trade by signing up to this. You wouldn't have seen the gold trade if you signed up to that, but you would if you did the basic content. And that was a really nice trade, and it was fairly stress-free, to be honest with you. It went quite well. This is what I mean about the bottom. So this is the S&P on the daily chart, and it looks like it's trying to carve some bottom out, trying to stop the bleeding. So today's going to be important. We might see another test of that demand area, so we might have to come down, because don't forget we are a sell on the sentiment. So we might come down to test that. Breaking this is going to be quite bearish. And then, yeah, we'll probably 3,500 or further. So you've got to be careful. And the sideways in the S&P, so that's not really helpful. Doesn't really tell us much. They are going ever so slightly long. So this would be like a phony candle. But we don't really want to see sideways sentiment ideally. Now on US 30, they've sold it. See how they sold it. So, you know, we come up. They went long. Oh, they got slightly paid. Oh no, they went long here. Yeah, didn't they? And then they got punished. See the direct consequence there. They sell it up. They buy here on this doji and come down. Right, so get a copy of this trading station. It's really good. And that could be a risky sell. No, it won't be a risky sell. It will be a sell if they go long, because it already is a sell at the big picture. If they long, then it's just going to add to the issue. So if it ticks up, then it will be a sell. Okay, not a risky sell. So this could be a risky buy, but you know, we've got some technical resistance here, as you can see by those arrows, and we have to remember the geopolitics as well. We've got quite a lot of ugly stuff going on right now. Moscow did want to open talks at all levels, so that's probably a positive sign. How legit that is, I don't know, but it's a positive news bite, so it might help the DAX there. But sentimentally, they'll need to short it, and then we can come up and test these arrows there. So you want to get a copy of this trading station so you can see what's going on there. All right, so gold, they shorted it, so I put out the signal to buy with a stop at 1660, and we went all the way up, and we rallied like nearly $15 on that move. So it was a really nice trade. Quite happy about that. I took half off, as I said in Discord, and then the rest went to break even. So I made a decent profit on that. So that's quite cool. Hopefully you understand the logic there. They sell it, so we come up, right? And they go long, so price falls, right? See how it works? And so they sold it, so it's a risky buy. It's a risky because we're above 50%. Liquidity areas and targets. So we've got a lot of mismatch. This is something I just put out into Discord. We've got a lot of mismatch on a lot of currency pairs. Right, you want red and red, or you want green and green. And see, the dynamics are quite powerful because it's the time component, it's their positioning and dumb money flow. So this is more powerful than static. That's just a snapshot. This tells us what they're doing over time. So it could be that we're seeing some reversal on some of these dollar pairs, but at the high level, they are sell. However, the position over time is bucking that trend. So, you know, we'd want to see continuation of this in order to change the static long. That's quite clear. So, you know, you want you want the sells to align, basically. Now, the largest stop loss cluster yesterday was NU above. Today, it's below, right? So this tells us how choppy the market is. It's going up to take stops, and it's going down to take stops. So the largest liquidity area is NU, there, 3.3 at that location, 55.30. Failure rate, it's okay. It could be a lot better. Kiwi and yen, they've got low scores, so it's telling us the retail guys are getting paid on their yen bets, and they're getting paid on their Kiwi bets, and they're getting destroyed on their pound positions. So whatever they do on pound, they're getting destroyed. Okay, so perhaps our trade of day could be good, but you'd want to be really careful around the pound, you know. And it just requires a lot of sitting on your hands. If you're looking to trade the pound, wait maybe for next week, because this week it's so the risk events this week. And so that failure rate should improve as you go into London Open, because it just tells us the trap has been placed and it should get higher. And as we progress through the day, that percentage will get higher, and it tells us that the retail guys are trapped and they're encountering losses. And that happens every single day. So that would be okay for the time. It should be a bit higher. And that's that. Now, pound CAD resulted in 60 pips profit. So I am going to put this on the profit and loss as having 60 pips, because we had it at 152.67, it went to 153.27, and it's a 60 pip profit difference. However, it did fall very aggressively post BOE statement about the pensions and that fire sale comment. So for the purpose of our profit and loss, we're going to have 60 pips, because I put this out into Discord. And you should always try and move your stop ahead at entry as an insurance policy. So it wouldn't have been like a huge loss, because you would have just got out at break even, or you could have got out when I published this, because 60 pips profit is a decent haul to exit and take profit, or take some profit. You can take partials, you can take half off and leave the rest at break even. So I'm not going to record this. I am going to record this how we've had it, so 60 pips profit, okay? Because it did really, really fall, but there's nothing we can do as traders. We just have to manage our risk, and so we need to know when to TP and SL as traders. And if you don't know where to TP and SL, you can always just move your stop ahead entry. So if it does reverse, you're out. Maybe you made like 5 pips or 10 pips or something, but at least you're not having like a big loss. And also to be careful with the pound as well. It's a bit risky that we did the pound yesterday, but we didn't know that the statement was going to come out from the Bank of England. So it's one of those uncertainties that we're dealing with as traders. So things are extreme, so that's kind of boring, technically extreme. And things are going back to the extreme. So we don't know if you really want to be fighting the technicals, but it's up to you. Economic calendar, incredibly busy 48 hours. We've got the FOMC minutes. We've got the PPI, we've got the inflation rate, and we've got CPI. Lots of stuff right now to be looking ahead of. And then after this, we've got the UK gilt activity on Friday, and we've got the potential scenario of the BOJ intervening on the dollar yen as well. And they could do that anytime. And that's going to send shockwaves. So we've got problems with pound, and we've got problems with yen currently. So definitely be careful around the pound, be careful around the yen, and you should be fine. And also maybe just sit on your hands. Remember what I said about the insurance policy. It's really important that if you're in like 60 pips profit or 90 pips profit, you can definitely think to reward yourself. You need to pay yourself. If you're up 90 pips or 60 pips, then it's a good haul, and also things do hit the ADR and they tend to reverse. So, and also they say about, the pigs get slaughtered. So don't get too greedy. Know where to exit. 90 pips is a good haul. 60 pips is a good haul. TP or take partials and you should be fine. So what you don't want to do is have like a massively wide stop, be up 90 pips and it to go all the way down and take you out at like a 90 pip stop loss, right? That's like that's not how to do it. So just got to be careful, right? Especially around this. It's a bit of a nightmare right now. I'm going to do a quick 2-minute video on the indices, and I'll speak to you guys soon.